Welcome back, episode 8. We are Friday, December 22nd. We're at 43,700 on Bitcoin, and we're just over 2 weeks away from the Bitcoin ETF. I haven't made a video in a bit. I wanted to cover here some of the tweets that I've made, a lot of the stuff that I'm seeing on Twitter, where I think we are with respect to the ETF and what are the price impacts I think that is likely for 2024, 2025. And I want to be sharing a bunch of slides this one, so I'm going to hope I'm not going to mess up. I did it once and I messed up the slides, so I'm going to really try to be careful not to mess up the slides. All right, so let's dive in to the screen, and I'm going to start with this chart. So this is the Bitcoin price, and I think we're in very good. I mean, I'm not a technician. I definitely don't sort of draw lines on charts and try to look at RSIs or other technical indications. But overall, I think you look at this chart and it really does look like we are going to at least make another attempt at 60,000, 65,000, and I think for a whole number of different reasons that we are going to pierce through it and go significantly higher. So that's where we are. Now, what is the catalyst for this? Well, the main catalyst, I think, as I said before, is this Bitcoin ETF. And the reason I am now 99.9% sure that this is going through, I've been following everything that is transpiring, and James Seyffart and Eric Bakunis are two of the best analysts on this. They're both at Bloomberg, and they're both great, and you should follow them. They don't only cover crypto ETFs, but they're covering this one, and they're covering the nitty gritty, and we are now down to the final language of this thing. So it is now going, we now know the BlackRock ETF will actually trade on NASDAQ. It'll be a cash in ETF, meaning that you have to deposit the authorized participants will be just pushing cash into Coinbase that will then be used to buy Bitcoin, and then that will translate directly into shares in the ETF. So we're at the end of this process. This is now just the final touches on a long form agreement and on the process, and I fully expect this thing is going to happen in the first week of January 8th, 9th, or 10th. It's one of those 3 days that it'll happen, barring some emergency or something. But I think it's happening, and I think everybody else is starting to think it's going to happen. So so I think I think then we have to ask ourselves, what is the impact of this ETF, and how does it compare to the halvening? Right. So I did a little bit of math on Twitter, posted this tweet 2 days ago, and really I took a look at how does the halvening specifically translate into Bitcoin per day, or Bitcoin total dollars per year that needs to come in from TradFi on this ETF. And the math is pretty clear, okay? If we stayed at around this price, which I don't think that's going to likely to be the case, well, the halvening would reduce supply by 450 Bitcoin per day, so from 900 to 450, which at this price is about $7 billion a year. So as long as you have more than $7 billion a year coming in from TradFi, you're gonna outperform the outweigh the ETF, the halvening, in terms of impact. So I think it's very unlikely we get less than $7 billion demand from this ETF. But people have said to me, "Oh, Fred, okay, what if Bitcoin goes to 100,000? Then it's going to be more than 7 billion." So I made those calculations too, and here they are. That's these other scenarios. So let's suppose Bitcoin goes to 100,000. Well, the halvening impact now works out to about $16 billion. But in this scenario, we have to realize that we're in a different world, right? We're in a world where Bitcoin is now above its all-time high, and every day on CNBC, people are like, Bitcoin has just made a new all-time high. The ETF has been a great bet. And I think this is going to drive further demand in the ETF. And I just don't think we're going to stop at $7 billion. I think we're going to go more like $30 billion coming into the ETF. So it's really hard to predict ETF demand because we're in this sort of reflective scenario where higher price increases the demand. So as we get higher prices, more money chasing the price. And I think that's the kind of scenario that we're looking at. But it's really pretty much any scenario. And of course, if Bitcoin goes to 20,000, halving affects only 3 billion. But ETFs is almost certainly going to bring in 3 billion, and probably in the first week. So I just don't see any scenario where this ETF is not really the main thing you need to focus on. And that's why I'm mainly focused on the ETF. So given that we have this ETF and we have the halving together, and we have now rate cuts, we'll talk about that a little bit later, it really seems to me like we have the perfect sort of environment for us getting to this sort of $500,000, $1 million price point per coin that a lot of people have put out as a target. As I told you about Tom Lee, not the only person. Corey Clipson, CEO of Swan, has said, I've been a proponent of $1 million a coin for a long time. So he said by 2030, sort of hedging his bets. But, we're getting to this point. This has been the long-term goal of people. And we might reach it. We probably will get in the same zip code this cycle. So now we're starting to see people saying, well, maybe that's not a good thing. Well, and we see, for example, Stephen Lupka from Swan, great guy. And Stephen's tweeting, the most probable attack vector is not a Bitcoin ban. It's the price to $1 million through a regulated ETF. And that gives Bitcoin to all the fiat bros and the TradFi bros. And that's a terrible thing. Well, my answer to that was, Bitcoin is an attack vector. Attack me more, please. And, I don't want to sound like, Gordon Gekko on Wall Street, but, it's all about the money. The rest is conversation. I like free markets. I like the idea of this world currency. I'm in favor of human rights and Bitcoin, but I got to tell you, if we get to $1 billion, I'm willing to sell my soul a little bit to the system. And I'm not really anti-system. I'm anti-losing money is what I am. I'm very much pro making more money. So, I am kind of the greedy capitalist that probably Stephen would be wearing of, but I'm that's where I am. So if we do get to it, maybe, however, we are in for a kind of a bear market. And this is what I would caution people about, to look very carefully at this price and to study the gold price from 2004 really to 2011. So what happened in gold in the beginning of the aughts, right? What happened was we had the housing crisis, right? And, gold tanked all the way down to the low 200s, right? I bought some physical gold in the $300 range here. And people just sort of, they were very bearish on stocks. They were like, stocks are bad. We got to go into a different asset class. So people were sort of looking around. The asset class that they really looked at was real estate, right? Real estate. Everybody sort of got involved in real estate then, because they were moving out of stocks into real estate. And that peaked in 2007 with the 2008 really with the great short real estate bubble. But what happened in 2004 in October, November of 2004. I'm not exactly sure. Can't remember exactly the date. But we had the gold ETF. And just like now, we had an anticipation of the gold ETF. I remember reading, when's the gold ETF going to start trading? Is it going to start trading? Are they going to allow gold ETF? How are they going to do it? How are they going to make sure it's fair? Is there going to be a lot of paper gold? How do we trust it? We can't really trust the gold ETF. All those same things you're hearing about Bitcoin were said about gold. Well, the rest, as they say, is history, because look at gold over the next, the next 6 years. Now, other than this drop here, which was really due to the complete stock market meltdown of 2008, right, which took everything down with it, right, gold was on a complete upward trajectory right up until 1800 here on July of 2011, right? So the problem was, after that point, once we had realized that point of $1,800 gold, that's when Peter Schiff was saying, sell everything you have and buy gold. Well, he's been saying that now for, 14 years, pretty much. And he's been pretty much wrong for most of them, because it's just been a terrible, terrible trade. And we were in this just absolutely dramatic bear market for 8 years, right? It took 8 years just to get back to this $1,800 price. And I fear the same could happen with Bitcoin, because if we get back to such a level on Bitcoin, we get to this level that everybody was sort of targeting as their kind of end level. Now, I know that it goes up forever, Laura, and there's that whole theory of Bitcoin just continuously going up, the permanent mega cycle, etc. I tend to not believe it, because the trader instincts, I've been trading for 40 years. My trader instincts just tell, we're not quite 40, but 35 years. My trading instinct tell me that that's just not the way markets work. The markets work is they come on and they find a new shiny thing. In this case, it was FANG stocks. Everybody started buying Amazon, Google. When Facebook went public in 2008, it was 2008, Facebook was another one. So these stocks were great recipients of capital in the 2010 plus era. And they completely overtook gold. So we had stocks out, real estate in, real estate out, gold for a while, and then gold out, FANG stocks in. That's kind of the rotation that we've seen. So I came to this sort of general view, and we have plenty of time to see whether that's true or not, but I will just mention that somebody I follow carefully, and who I have a lot of conviction he's pretty smart cookie, is Bob Lucas. Another kind of smart old rich boomer like me. And Bob posted this last week on December 16th, right? Might have been a week ago. He said, when Bitcoin peaks, I'm a believer we will go in for a very long winter, probably 8 years between all-time highs again. So, I definitely think we're going into a really great medium-term trading opportunity for Bitcoin. But as they say, don't forget to get off the train. At least in part. Don't forget to take your profits. So, I do recommend in general, if we're somewhat right about this stuff, take your money off the table. Let the rest run house money, Don't get wrecked by the next bear market. So, where are we sort of in general now? Where are we in general? Well, I believe that we are in. I believe we are in Bitcoin. I believe we are entering 2 great years of what we call Bitcoin summer and fall. And let's just review, from my perspective and from my direct, experience with Bitcoin how these seasons, and it's been uncanny how these seasons have worked. So, starting in Satoshi, or when Satoshi came out with Bitcoin in 2009, nobody was interested in it at all. So 2009, 2010, absolutely nobody interested. 2011, that was Bitcoin kind of, you might want to call it Bitcoin spring. 2000 with the Bitcoin Pizza Day, and then we had Bitcoin fall was 2013. The the rise of Bitcoin to $1,000 a coin, and then we had Bitcoin winter in 2014, with the February, the Mt. Gox collapse. I had a few coins in Mt. Gox. Not a lot, but just I was not a big believer in Bitcoin, but I was definitely following it, and I was a skeptic then, but I was involved. So 2014 winter, 2015 spring, 2016 summer, 2016 actually we kind of climbed back to $1,000 a coin. It was a very and we had we were in the Bitcoin block size wars, okay, and then 2017 full on Bitcoin fall. Fall being the better season for Bitcoin than the summer, right? So in 2017, certainly it was. And then Bitcoin winter, 2018, Bitcoin spring, 2019, it started climbing back. I started getting conviction in Bitcoin. Bitcoin summer 2020, we get to 30,000. Bitcoin fall, we get to 60,000 in 21, and then Bitcoin winter in 2022. So, I look at this year of 2023 as, as the Bitcoin spring, right? It's, the thawing out. People are building back conviction, but they really don't. If you go outside, people still think Bitcoin's dead. It still looks kind of cold out there. People really haven't bought into the CTF. They don't really understand it. They don't understand it's coming. They don't see it. Bitcoin summer is next year. Bitcoin summer is when Wall Street can buy into the CTF. We have the halvening. It's just starting to go. So I think 2024 is going to be a really pretty good year, and I think 2025 could be even better, right? Because this could be the Bitcoin fall, where now you have full TradFi movement. You have rotation into this. These asset rotations take a while. They take years. So it's not likely to happen on year one. It may happen on year two. And then finally, I would like to talk about Joe Carlasale had a very interesting tweet. I don't have it super handy, but Joe had a tweet which is, the real catalyst might be rates, not anything else. And he cited Trump saying that Trump said, we need to get rates to zero or less, and we need to refinance our long-term debt. Now, Trump didn't do that last time rates were zero. He didn't refinance long, and that was one of the biggest mistakes I think the Treasury did, right, is actually not locking in those low bond yields when they could. But I definitely think that's kind of, if Trump wins, right, that's definitely going to be the game plan. I think we're going to see really low rates, like aggressive rates. And, he will fire Powell and get somebody in there who will do his bidding. So I don't know what the chance of that is. But I kind of think even if Biden wins, I still think we're going to get low rates for a while. And so between all these things, I think Bitcoin's going to do phenomenally well over the next 2 years. I'm sorry, but I am not it goes up forever Laura. I don't believe markets work like that. But I don't really care. If we get to $1 million a coin, $500,000 a coin, I'm a happy camper. I'm happy to take some. I won't take all because I do think Bitcoin is just such an amazing thing. But I'm willing to take those, those tens of millions of dollars off the table, and diversify. Not really having a view on fiat, but there's lots of things you can buy in life, and that are okay places to park your money. They may not do as great as Bitcoin, but I think Bob Lucas is right about sort of playing around and trading around a core position in Bitcoin. I think that's the right way to go. So I'm going to sign off. And again, if you've been following me, thanks a lot. If you have any questions, hit me up either in DMs or on whatever. I'm really just a Bitcoiner with a stash who wants the number to go up and who loves the Bitcoin community. And again, thanks for following me on Twitter.